Hello everybody, my name is Geoff Wild. I am the editor of IAM, and it's my pleasure to welcome you to today's webinar entitled What Can We Predict from 5 Years of Secondary Patent Sales? The webinar is being presented by Kent Richardson of the Richardson Oliver Law Group based in Silicon Valley, and Kent will be talking us through a number of slides in which he will try to divine where the patent sales market is at the moment, and also be making a few predictions about where it might be heading over the next few months and years. During the course of the presentation, you'll be invited to take part in several polls. That is not compulsory, and I should say that all
Hey, Geoff, I think we lost you. Geoff? All right. Looks like we lost Geoff. Apologies for the technical difficulties. Unfortunately, the offices of Globe IAM were very close to the terror attacks in London, so everybody is dispersed there right now and working out of their homes. So please bear with us today while we work through some of the challenges. Geoff was just saying that there's going to be some polls, and those polls will be anonymous. So we'd really like you to participate. I think some of the questions will be interesting for you, and I think the results will be interesting as well. Again, my name is Kent Richardson. I'm a partner at the Richardson Oliver Law Group, a law firm that helps corporations in corporate-to-corporate patent assertions. As part of that, for a long time, we have been involved in buying and selling patents. So in Silicon Valley, where we're based, there's been a lot of growth in what we call unicorns, high growth companies. Their patent portfolios could not keep up with their growth, and they started to have more and more risk. So we started to help buy patents for them, and last IAM magazine, I believe is the last one or the one before, we published an article on how we helped LinkedIn buy 900 patents. So what we're going to talk about today is this thing called the secondary patent market, and let's get into that. We'll be looking back over 5 years. So we've been tracking this market for longer than 5 years, but we have pretty good data for 5 years. In fact, we have a paper pending with Brian Love at Santa Clara where we go into the detailed data for the 5-year look back, and you're going to get an overview of some of that today. We'll then talk about current market dynamics, what's going on in the market today, and then we'll talk about some predictions for the market for the future. So what are we talking about when we talk about the secondary patent market by itself? What is it? Well, it's really as simple as a seller selling a patent, one or more patents, to a buyer. And for those in other industries, I deal in tech mostly, and so imagine industries like chemistry, biotech. You will often not necessarily transact just the patent, you'll transact know-how with the patent, you'll provide exclusive licenses. What we're talking about here is something different, a simple transfer of the patent for cash, typically. So, there's no additional technology going, there is buying and selling of patents, and that's it. All right, so what does it look like in one of these patent packages, as we call them? What you end up with is a list of patents for sale, some description of the market, some infringement analysis, and for the lawyers on the phone call or on the webinar this morning, you know, can be surprising that yes, you will receive claim charts targeting specific companies saying that there is an infringement case. And then you'll get some information typically on the background of the sellers. So I broke this into 2 bullets because the information in the top line is what you will easily get from a broker or seller. The second bit of information is a little bit more challenging. You have to usually phone them and say, what's the asking price? Sometimes you will have the bid due dates, but they're usually pretty soft. And then if there's any special circumstances, some things will have been put together in the package, some things won't be. So I have an example here from one of the brokers. He gave me permission to put this example up. And it's a portfolio Confluence was selling some patents. They brought this to market in July 2013, took over a year to sell it, 15 patents with open applications. That's something that's interesting for buyers if there's open applications. The asking price, 7 figures. Now, for those who haven't dealt with this before, that is a common way in which asking prices are provided. In fact, we have a table of, I think, 25 different translations when somebody says 7 figures, what that actually equates to, because it's difficult to communicate to our clients on what the price actually is when it's something stated as 7 figures. So you don't get nice, clean asking prices. There was multiple claim charts presented here, and they targeted Apple, Google, Facebook. Ultimately, this was purchased by a real company, not a NPE, and it was purchased by a company called Fingerprint Cards. You'd imagine, here's the claim chart that was started, or part of it, against Apple. This company might have bought these patents in case they were, in the event that there was a concern that Apple would come after them, imagine over fingerprints technology. So that's what's in a typical package. Now, what can you do? I mentioned earlier that, you know, we helped LinkedIn buy over 900 patents over the course of 4 years. This is really why LinkedIn bought so many patents. If you look at where they were in 2011, around 2012, they contacted us and they said, this is where we are with the number of assets. That green line is barely off of 0. They have almost no patents. And their current trajectory was looking very weak for a company in the multi-billion dollars of revenue. So over 4 years, looking at the priority dates of what we were able to buy for them, and then also what they were able to increase their own organic portfolio, 2 things happened. One, they substantially increased their ramp rate of their own portfolio, but through acquisitions, they were able to buy. Just 1 second, I've got a technical difficulty. Eric, I have no idea what you're saying. Eric, am I on you, bro? Is it? Worked out really quite well. All right. So I'm going to start a poll here. This, if you've never seen this this graph before, what it is you have, in any kind of technology market, you have an adoption curve, and this is the adoption curve. You have people who are really early innovators, and they adopt the technology. Those are the ones that are wearing the new technology watches early. And then you have different stages of adopters. So, you know, people who buy early or early majority. In what this describes is how the overall potential market is adopting the technology, but we can also think about it in how people might be participating or learning about and wanting to participate in the patent market. So my question to you, as I launch this poll, is, you know, where do you think we are? And I'd appreciate it if you'd sort of click and let me know here where you think we are. Are we in the innovators, the early adopters, the early majority, the late majority, or the laggards? So what that would mean is we're in the innovators. It's really just a few companies transacting and very few people doing much else. If we're in the laggards, it means that almost everybody who will ever participate in this market is participating now. And I'll let it run for, got a few more coming in. And I've asked this question, by the way, of a group of about 15 companies simultaneously. And interestingly, we had a pretty much a consensus. There was a few outliers, but we had a pretty much a consensus where we were. So looking at the votes right now, we have about 20% of in the early adopters, 30% in the early majority, and 40% in the late majority. So where do I think we are, and where did most of those companies think we were, is right around here. The split somewhere between the early adopters and the early majority. Now, people have said, well, what data did you use for this? How did you figure this out? And the answer is, I put the arrow on the curve and said that's where we were. I don't know how you would actually analyze this effectively other than doing a poll. I think given that lots of companies do not participate, it's difficult to say we're in the late majority of the laggards. I definitely think we're past the innovators. There's a large number of companies who are participating. So, I think, oh boy, I apologize. It'd be more difficult for you to have seen the, would have been easier to see the graph. So anyway, we're at this early majority stage probably. We're probably not late majority just because there's lots of companies that aren't participating. All right. Where were we 10 years ago? So think about 2007 in this market. Where were we? So Intellectual Ventures was the biggest buyer by far. They now don't buy anything. There were very few patent brokers, and it was hard to figure out exactly who was brokering and what they were brokering. AST and RPX were relatively brand new. AST had just been founded a couple years before. RPX was just getting funding. I'm going to move over to my other screen. There were few capable buyers. What does that really mean? It means that even if you wanted to buy, your internal processes of your company weren't set up to execute to a deal. So you knew that there was a good return on investment. You knew that this was a good purchase. It was still difficult to get a purchase through. There was no budget for buying. And the toughest thing is nobody knew what a good deal was. Frankly, the only people who really knew what good deals were Intellectual Ventures. They had all the data. That was in 2007. Where are we today? Versus 5 years ago. 5 years ago, still most of the sources were private. Public, most of it today. You can find the sources of the patents. 5 years ago, what was published about deals? Really, it was kind of things that showed up in the Wall Street Journal, the front page of the New York Times. Big splashy deals were what was regularly reported. Today, Bloomberg publishes a quarterly report on the secondary market. IAM has been publishing for 5 years an annual report written by us. You can get information about this market. What was pricing like in 2012? And it was skewed, and what I mean by skewed, it was horribly skewed in the sense that board members only saw the prices that were reported in the articles in the Wall Street Journal or the New York Times or whatever publication. And so when we do financial models, for example, for making purchases, we specifically include those kinds of pricings in one of the models, and we put that in front of the board of directors, and then I put a big red X through it and say none of these prices are realistic and they're not representative of the market. So today we have quarterly public data. You can go and Google what is market price for patents and get an answer. 2012, who had the capabilities? Remember I said in 2007, very, very few companies had the capability to get a deal done. It was Intellectual Ventures and a group of companies, a relatively small group of companies, call it a couple dozen in the world, who regularly could make patent purchases. Today, and I think this is fascinating, we see small and medium-sized enterprises buying. We see non-public companies buying. 30% of the purchases made by corporations last year were made by non-public companies. That tells me that there's a much broader adoption and a much greater capability for companies to participate in this market. All right, let's talk a little bit about market dynamics. Remember, I had the sellers and the buyers. Well, who facilitates these transactions? Who are the ones that actually make this happen? Well, there is a group of companies like my law firm, and there are patent brokers, there are groups like AST, who all facilitate IAM market, who all facilitate the secondary market. And that's what I call a quasi-public market. So you can get the information on all these deals. It's somewhat difficult to get. It's not quite as simple as going on Zillow and looking up the price of a house, but you can find the information if you're willing to take the time. There's another part of this market, which is direct sales. Sellers going directly to buyers. We don't have a good sense of how big that market is. We've done some analytics on it to estimate it. Our best guess right now is 50-50 split. Our transaction flow is much more direct sales than it is through the open market, but they're both viable methods of participating in the secondary market. Call it 1,000 deals a year hit the market. Not all of them close, but about 1,000 deals a year. What does that add up to? We added up all the asking prices of all the patents that we've seen. It's about $11 billion in patent packages. A lot of it is unsold. You can see that only about 20% of the packages are sold. It covers a large section of high tech and some other technologies. So almost everything in high tech is available somewhere on the patent market. And then you see convergence happening in areas like automotive and IoT. So you see participation in non-high-tech industries happening. So good example is automotive. 3 to 5 years ago, really, there was almost no automotive patents on the market. Now there's quite a few. What we track is almost 95,000 actually patents in our database, and so we track to see what happens to those patents over time. We also supply that information to our buyers, our corporate buyers. So this is the big question that many people have. What is the asking price of a patent? It is $260,640. Now the last decimal place there, it says maybe suspect. I'm joking. I had an acquaintance of mine say, what does it matter what the average asking price of a patent is? So why should we care what the average asking price of the patent is? We all know that asking prices are literally that. We also know that there is an average price And if you are asking 10 times that average price, you better have a very good explanation as to why you're asking that much. So what I mean by that is, if you want $2 million a patent, you better explain why your patent is so much better. I'm sorry, can I get somebody to mute? I've got a little bit of background noise. So the point is, if you're 10 times asking price 10 times higher, you better explain why your patent's worth 10 times what an average patent is. And there's an underlying assumption that if the patents have made it onto this market, especially if it's been brokered, the broker has done some diligence. So I know the best brokers do not accept every patent. And I think that's an important part about an asking price. It is not that it's $260,640. It is that if you are asking 10 times that, or you want somebody to sell it for 10 times less, you better have a good reason why. All right. You know, that asking price also comes with some caveats. This is a large group of data. There's lots of different technologies, and frankly, every patent is different. By definition, they're supposed to be an invention. So I said there's a few caveats. I'm joking, right? But there are, when we talk about average asking prices, you have to be very careful. The first standard deviation is actually the average. This is the mean. It's a little bit lower than that now. We're seeing some tightening in the asking prices. In other words, they're getting closer together. But there is a lot of caveats to the asking prices. What's been happening with asking prices? Well, they've been dropping. Not surprisingly, in the United States, things haven't been going well for patent holders for a while. I don't know where we are right now on the Supreme Court, but it's probably caught, out of the last 14 cases that have hit the Supreme Court, 13 have gone against patent holders. Also, the smartphone wars have cooled down. I think that was driving a lot of the pricing. Additionally, intellectual ventures is gone from the market. From putting $250 million in the market in 2008 to zero. Well, when the market's only, well, we'll talk about how big the market is in a little bit. But in short, the prices are down. The trend, though, seems to be more stabilizing. And I think that's interesting. All right. This is, remember I said that claim charts come in, or evidence of use is the term that most people use. Claim charts come in with the patent packages explaining who infringes today. What we did is we do a summary of those claim charts, and I did a word cloud, so which is effectively a word count of the frequency of words in those summaries. So if you are Facebook, Google, Apple, Microsoft, Samsung, you are targeted all the time. I think the number one, I think Google gets targeted the most, and it was 128 times. And something like Hitachi would get targeted 4 times. So think about that. If you are Facebook, Google, Apple, Microsoft, Samsung, this is a tough place to be. You are regularly targeted for an infringement case in all these patent packages. You can also see other technologies in here, so it's not just the companies. We include technologies and products. And so you can get a sense of what things are more popular with brokers when they're selling the packages. All right. I said prices were dropping but stabilizing. This is more concerning. Sales rates. So what's a sales rate? If you bring 10 packages to market, how many would you expect sell over their life? Now, sales rates have never been great. I think the most I ever saw in a year was 50% of the packages brought to market eventually sold. Well, what we're seeing here is that's dropping. So if there were if there were 10 packages in 2010, 5 of them would sell. If there's 10 packages in 2016, we're expecting 1.5 of them to sell. That's a pretty tough trend. If you are a patent broker, this is tough business. Now, something else that's interesting. We looked at just the percentage of the packages that came to market, how many came onto the market and how many left. And that actually has stayed pretty steady. And so what we're seeing is some of the older packages are selling at a much higher rate than we would have expected. And so the only thing I know about this market is every time I think I know exactly what's going on, it changes again. And I think that's an important thing to keep in mind. It's a very still new market, and it's constantly evolving and changing, responding to the legal environment, responding to the business environment. All right, so this graph helps us figure out which brokers are doing very well. Every dot is a broker. The sales rate is the percentage of those packages brought to market by that broker that have actually sold within that data set. So we pick a data set that's reasonable. In this case, the data set had only a 10% sales rate. So some brokers do much better than other brokers. And in fact, up and to the right is where you want to be on this graph. If you were a dot on this graph as a broker, you want to be up and to the right. All right. So there are some brokers who do not sell anything. That is really tough, bringing 20 deals to the market, 30 deals to the market, 10 deals to the market, and selling nothing. There are some brokers who sell exceedingly well relative to the baseline rate here. The baseline rate being 10% of deals brought to market were actually sold. There are some brokers who are selling at 4x, 5x that. So what does that mean when you're going out to sell patents? If you're going to use a broker, some brokers have an expected value of 4 to 5 times higher than the market overall, and some brokers have an expected value of closing a deal of $0. And we think that's important for sellers to know. We also think it's important for buyers because the underlying assumption is that the brokers who are in the green circle are bringing more interesting deals to the market, and those are the ones that you may want to spend more time thinking about or looking at. You know, there's a graph put forward by Suzanne Harrison of the value distribution in the secondary market. So when you go to buy patents, what you really, she has a value distribution of patents within your own patent portfolio. And it's a log normal distribution, looks like this. It means very few patents are highly, highly valued. In fact, the y-axis is a log scale, and so as a result, the patents at the top are very, very valuable, and the rest of the portfolio isn't very valuable. We believe that's true for the secondary market too. In other words, there are very few patents that are going to be valuable to you. And I think the important thing here is, I said, it's valuable to you. It is not that they are not valuable patents. It is that the use case that you have for your patent purchasing is different than other people. And so there are very few patents that will fit that use case. One of the things that we spend a lot of time on is ensuring that when you're buying patents that you're efficiently diligencing those patents. So we try to do the legal diligence very last in the process because frankly that's the most expensive thing, and you can't afford to do legal diligence on every portfolio that comes by. All right, let's look at the distribution of sellers by type. Operating companies are still the biggest sellers by far. NPEs have increased their sales, and I would expect that to continue. One of the big takeaways from this is considering lot network or cross-licensing competitors should help you in the event that your competitors sell patents, and in particular sell patents to NPEs. The vast majority of NPE-owned patents come from corporations. So something to think about in part of your overall strategy is the sellers are your competitors and they're selling patents that can eventually be used against you. Over 5 years, it has remained true that operating companies are still the biggest sellers. And you can see the increase in the orange here for NPEs and how they've increased their selling over time. All right, so operating companies are also now the top buyers. That's changed. NPEs used to be the top buyers, and that's not as it hasn't held as true. And I'm a little bit cautious on this because it's been close neck and neck in some years, depending on how you slice the data, that corporates are ahead of NPEs, and other years they're not. I think the important thing is I would expect that NPE buying is going to drop as a percentage of the market just over the next few years. On a single buyer basis, RPX was the top buyer, and that was the first time that we saw a non-NPE be the top buyer. Ultimately, you add up NPEs and OpCos, and you can see that they're pretty close neck and neck. Defensive aggregators definitely holding their own throughout the last 5 years. I mentioned it earlier. You see that the orange line here. Non-public companies now represent 30% of that purchasing, from 0 in 2012, effectively 0. So what does that really mean? It means that there are a lot more non-public companies with the capability to go and buy patents and solve their lack of having a patent portfolio. All right, so who are the top buyers? I'm just going to pause for a second. This is a long list of who the top sellers and buyers were. Some notable companies on there: AST, not surprising because they buy patents and then release them back out on the market, sell them. British Telecom, regular patent asserter. AT&T sells quite a few patents, and they have a surprising portfolio sometimes. On the buy side, you see Intellectual Discovery out of Korea, which is a state-funded licensing organization, not too different from Intellectual Ventures. See Intellectual Ventures on here. See other companies too, like Red Hat. And by the way, this Canadian holding company is it's a shell company like you'd see in the United States. All right, so we did some analysis on what happens to these patents before they're brought to market and after, from a litigation and an IPR perspective. Turns out, actually, we got better data, and these patents are much more dangerous than you would expect. So if it is a sold package, it has a 10% chance of being litigated after a sale. If it is unsold, it has around a 3% chance. So all those unsold deals, if you remember, go back to that $11 billion of patents that we track, you can expect around 3% of those to be litigated, 3.5% overall, and if it was sold, it's a 10% chance. I think that's important. I think it's important from a risk modeling. I think it says that defensive aggregators might have a better ROI than you might have thought. And it's definitely worthwhile going back and taking a look. If you take this information and look at where you sat in that word cloud, if your company was in the center of that word cloud, your defensive aggregator strategy is really important to your long-term health. All right. Let's talk about some predictions. So where's this market going? I'm going to just share what the results were again. And you can see this is where we thought we were. We got this late majority at 40%. I think, I still think we're in the early majority, but we'll have to see what this market really is. Market size, we think it's $200 to $300 million. And actually, I'm going to see what people think right now. I just pushed another poll out. Do you agree, not agree? Unfortunately, we don't have higher or lower on this one. And we're just getting the polls in. You know, what we do to estimate the market is we take all of the deals that we see and we look for the sold deals. We estimate what the actual price was versus the asking price, and we add that up. Then we do some checks on the number of brokers that we're thinking are in the market and how many could be sustained off of that many transactions. So we try to check it twice. So I'm going to close the poll and share it because right now we have violent, non-agreement, and agreement. So it's about 50-50 right now on whether people agree or disagree. And that was 65% of the people voting. All right. So next prediction, more international sales. We continue to get more clients asking. I'd like to get your thoughts, though. Do you see this industry shifting away from the United States? We've seen reports lately saying there's more confidence. IAM in particular had a report saying that there's more confidence in the U.S. system than there was a year ago. What do you think? Do you think this is going to be a trend where you see more international sales, or is it still going to be a focus on the U.S.? So this one's pretty easy. I'm going to close it out and share it. With about 64% of the people voting, everybody thinks this is international. So I tend to agree. I spend more time overseas now. I think this is definitely a trend that we will continue to see. All right. Prices stabilized? I think that's true. I think prices have pretty much stabilized. At least asking prices. There's a big discount. We did a study of 128 actual closed deals across 5 corporations, and we found that our estimate was there was a 35% discount on average from the asking price to the actual close price. One of the things that was most interesting in that study is even though these companies did not share information beforehand in doing all these deals, their actual close prices were pretty similar. Sales rates, I don't think it's going to change. I think it's going to remain low. I think there's a lot of good reasons for that. I think the primary reason is it's very hard for the brokers to figure out exactly what people want to buy. The best brokers, I think, do the best job at figuring out what buyers really want to buy and then going and sourcing those deals. I think this market continues to expand. I think we move more into that majority and late majority as new kinds of deals come to the market. So the brokered market is one place, the direct market is another place. You see IAM market coming online and substantially increase the number of potential deals on the market. You see IP3 from AST and coming to the market and closing a large number of deals in a relatively quick period of time. I think that there's just going to be more variety in the kinds of deals that can be done, and I think that's a good trend. I don't think NPEs are going away. There will be fewer of them. I think there will be fewer buyers overall, and I think that NPEs see opportunity here. From where an NPE would pay cash up front, we're hearing a lot more about back-end deals only, but we're still hearing and seeing deals. And I think we see brokers leave the market. Now, I'm paused here for a second because we check this on a regular basis. We source from about 100 different sources every year, most of them brokers. And we've sourced from about 100 different companies for the last 5 years. So I don't know if the brokers go away entirely or whether they reduce the amount that they bring to market. And I definitely think that that has happened. we'll have to see. I think if you're not closing any deals, it's very hard to sustain your business as a broker. And with that, I think I'll turn it back to Joff and stick with this page, and we'll go forward.
Thanks very much, Ken. Can you hear me?
Yeah.
Great, fantastic. Apologies for the mix-up at the beginning. As I think Kent explained, we've been a bit in a bit of confusion this week because we haven't been able to access our office because of the events in London. So if that caused anyone any inconvenience, I do apologise. But hopefully you got a lot out of Kent's presentation. I think there was an awful lot of information there. It will be available to people afterwards as well. You'll be sent a link, so you'll be able to download it and listen again in a more relaxed way. Let's put it that way. But we have a few minutes now, and I have some questions, Kent, if you're willing to answer them. And of course, if anyone out there has any questions, please feel free to type away, and I'll see if I can put those to Kent as well. But Ken, one of the questions I have is that you are predicting more international sales, and it looks like the vast majority of the people listening in are predicting more international sales, but you're also predicting a market size that's remaining around $200 million to $300 million in total. Doesn't that tell us that actually we're going to see a further decline in patent values over the coming months and years?
You know, if the question is, do I believe that the overall market contracts more than it has? I don't know that it's going to, because I think that you see the shift away from the U.S. to more international deals. So we have clients out of China. I was just in Japan. There's a lot of interest in sales from Japan. I think that we're just going to see a lot more. We did an informal analysis of assignments out of China. Out of the top about 20 transactors, so the companies that clearly were transacting patents out of China, what we saw was we could account for about 80% of those deals in the U.S., but there was 20% that we didn't see corresponding deals in the U.S. So we're starting to see China only, or China but not U.S. driven patent deals.
Wow. So that's people specifically buying Chinese assets.
Yeah. Yeah.
That's a hell of a development, isn't it? Do you have any sense of who the buyers are? Is it mainly Chinese companies buying Chinese patents, or do you think there is an international basis to the purchasing?
So it looked like it was Chinese companies buying Chinese patents. Now, we didn't correlate it. We couldn't find the correlation to the U.S. companies. And I think that there's a lot of different business dynamics in China that make trading in patents a different value proposition. So it's not necessarily exclusion or defense. It might be government incentives to transact, things like that. But I do think that there is a distinct shift. I haven't checked, but I don't believe 5 years ago you would have seen just a bunch of big Chinese only transactions happen.
Okay. We are getting a few questions in from attendees of the event. The first one we have here, you showed the graph with the curve in patent values that Suzanne Harrison had put together. And when we have a question here, how does having 1 to 2% of high value patents actually affect the asking price when you're putting a family or a portfolio out for sale? How does that affect the pricing?
Well, the way we look at it is, that's all the deals that are on the market. And if I'm going out to buy for somebody, what we do is we say, well, how do you define what success looks like? What's the kind of patent that you would want to buy? And we're very careful about cautioning this. Don't try to go out and buy litigation grade patents. Not because you can't buy litigation grade patents, but because under describes what success looks like. We need a patent against this company in this time frame, like impacting this much revenue. So that's the first part of it. Now, if you say that that is what success looks like, you have to have a infringement by company X, and it's got to be a big enough infringement, so the market's got to be large enough that company X is on the hook for enough damages. Now you can say, out of all the patents on the market, how many of them are going to fit that? And it turns out it's a very small percentage. But if you think about it, the value to you for those few that hit is very high. So it's not so much that on a per package basis, the value distribution, although that's somewhat true. You usually find only 1 or 2 patents in a package is very valuable. But across the entire market, you see very few packages with very few patents are very valuable to you.
Yeah.
Does that answer the question?
Yeah. Do you ever, as a follow-up from me, do you ever get a situation where people that are selling don't realise the value of the patent that they're selling, or do people? I mean, the cliche is everyone thinks their patent is worth $10 million or $100 million. But are there ever situations where there are extraordinary bargains to be had because sellers don't quite get what it is they're selling?
You know, I have so many scars from the other side of that, where people are like, yeah, this is I've had guys who say it was $1 billion, and I think Linda Beale is on here, and she's had $1 billion requests for patents. So those are what I really remember. There are a few occasions where we have bought patents where we think that we got a really good deal on it. I don't recall a situation where somebody had no idea. And specifically, brokers do a great job of trying to enhance the value by explaining where the value lies.
Yeah.
The best brokers are very good at that.
Yeah. Is it, I mean, this is kind of a negotiation thing, but is it a bargain where it's a good idea to go in with pricing that is higher than what you're expecting? Or should you be pricing realistically from the very start?
Well, so, 5 years ago, we just ignored price. Like, literally, unless you were 10x above where we thought the price was, we ignored what price you were asking. And we would go and say, okay, let's look at this deal and see if we can get a deal done, and then we'll assume that they will take a reasonable price, whatever that might be. That's started to change in the last couple of years, where we now have price matter up front. So if the price is too far off of where we think market is, the client is saying, no, just move on. And so the expectation is that people are better at pricing now, and that wacky pricing is going to be a deterrent to getting a deal done.
Sure. And we've also seen, and you mentioned it in your presentation, the patent purchase program, the international patent purchase program, these fixed time programs where people just give a price and it's a yes or no from an organization like AST. Do you think that is kind of a template for the future?
Can you just repeat that last part? It just got a little garbled.
The patent purchase program, the fixed time, you tell us the price and we'll give you a yes or no. Do you think that is that the way things are going to go, or is that going to remain a kind of a specialized area within the buy-sell?
I think actually it becomes a new facet of the market. So there are going to be the broker deals where the best brokers are really highlighting the most valuable patents. There's going to be these faster markets. There's going to be things like IAM market where large corporations are signaling to the market that they're willing to transact. Whether you go buy the specific patents that they're listing or not is a separate issue. So the market expands in diversity in the ways that people can participate, and I think that is a continuing trend.
Okay, fascinating. Another question from an attendee on brokers. In your experience, what do brokers typically charge? What are their pricing parameters? How does it work?
So the sell side brokers, so the people who are representing the sellers, charge 25%, pretty consistently. Like, you can occasionally get a lower price. If it's a much bigger deal, hundreds of assets, you can get a lower price. But 25% is pretty typical. And you sit there and you scratch your head. In 2007, if you were a broker making 25% and you were selling $5 million deals, you had great paydays on a regular basis. Now, today, with a close rate predicted at 15 to 20%, even the best brokers are only selling 50% of the assets. That's the best brokers, and they're only bringing a few assets, a few deals to market a year. That 25%, you can start to see that they're actually having to earn quite a lot. Prices are down, selling less.
Yeah. And in terms of, you say best brokers, and again, I know you touched on this during the presentation. What differentiates a good broker from the rest? Is it just the ability to get deals done, or are there certain other attributes that as a seller you should be looking for if you want to work with a broker?
So the greatest correlation that we can see is the best brokers are great salespeople. And I don't mean that in any kind of pejorative way. I mean that in the sense that they are very good listeners. They are constantly willing to go and try. They have an unbelievable positive attitude towards an optimistic view of the world. They are just constantly out there trying to get deals done. So that's what we see as the correlation. They tend to be really good salespeople. There's some other factors. Sometimes, surprisingly, some of the best brokers are not people that you would expect. They have a tenacity that doesn't just come across immediately. And I think the other part is some of the people that you would expect to be great at this, frankly, are pretty poor.
Right. So if you're sitting there in front of a broker that you don't know before, that you haven't worked with before, what's the killer question? What's the question you ask to determine whether this is the person you should be working with?
I would ask for references, and I would interview at least 5 brokers.
Okay. And a good broker should be able to provide references.
Yeah. And frankly, we offer that as a service for some of the bigger clients, and we literally offer it as a service to help them pick a broker that works the best for them. Not just has a great sales rate, but has the personality that fits with them the best. If, like I said before, if you pick the right broker and you can get that broker to represent you, not all brokers will represent everybody on every deal. If you can get them to represent you, your expected return can be 4 or 5 times as high as just the baseline.
Okay. Okay, another question. Is there any pricing data on patents which have survived IPRs versus those which haven't yet been challenged?
Not yet, but that's a great question, and I'll try to put it in next year's report.
Okay. But I guess logically you would expect if someone has got through an IP, if a patent's got through an IPR, you would expect that to increase its value.
I would expect that to be the case. There isn't that many pieces of data, but I think, at this point we'd be able to have enough of them that we could take a look at it. I think it'd be fascinating. One thing that's a little tricky about this market is we get the initial information about price, and we tend not to get all the rest of the information. So, for example, the way we find out if a deal has closed is we check the assignment database.
Yeah.
Now, if you think about that, that's a little bit unusual. Why wouldn't you know if a deal's gone or not? I've talked to brokers about this. They are sometimes barred from announcing it, that the deal's gone.
Okay, right.
Under NDA.
Yeah, I guess so. Here's an interesting question. How do you see the difference between cash-only transactions and the more privateering style of transaction? Obviously, I'm guessing that what you're looking at are the cash-only transactions, but do you see different kinds of values between that and privateering style deals? Yeah.
So we actually do almost all cash deals because we represent corporations, right, buying patents. We see some of the back-end deals And we don't do a lot of those deals, but we have seen them. And basically what's happened is there's almost no cash up front. Now, you can get some cash up front, but relative to what you used to be able, it's more difficult. And the deals are anywhere from 35 to 50% is going to go to the buyer, and maybe higher. You look at what you really net out at.
Yeah.
So go ahead, sorry.
So I was going to say, do you get a sense for the balance in the marketplace between cash-only deals and these more kind of collaborative profiteering style deals?
I would think that almost every NPE deal that you see now, you should just say that's a back-end deal. Almost every. So call it 80%.
Gotcha. So any announcement you see from an NPE that they've purchased a portfolio, what they've basically done is a privateering style deal where they'll be basically paying off the seller through ongoing licensing transactions.
Yeah, that would be my 80-20 on this.
Yeah, sure. Okay, another one. What are the hot technologies for the market, and how has this changed over time?
Yeah, so that actually changes a lot. In fact, I was just talking about about this with somebody. So you can see the shift, and really you can predict it based off of what is hot in technology. So 4 years ago, wearables were really hot. You saw a lot of patents come to market. Automotive wasn't hot. Automotive's hot. You can see a lot. You can see a lot more deals. AR, VR, that's hot. Still stuff that is hot. Cloud computing, anything in the cloud, still hot. The thing that really took a hit was business process. Those patents really appear to take a hit and might be coming back a little bit. Yeah, and then things that have been more tough. Semiconductor's been tough always because it's just complicated. It's expensive to figure out if somebody is using that. But it's also, it doesn't blow up under Alice either. So there's
Okay, we're just about coming to the end now, Ken. Two more questions. One easier one, I think, and whether you want to answer it or not is another matter. What is the largest deal you saw in 2016? What is the top quintile for patent deal sizes?
Boy, I don't even remember. It was hundreds of patents for sure. And like I'm working on one right now that's sort of above 10 million.
Okay.
Which would be the larger end of the scale for us. But not for everybody. I mean, there's other private deals that are being done that are higher than that.
Absolutely.
And one comment on that: most people like to split their packages up because it's hard to get full value when you bundle it together. You can see a drop in per asset pricing when you bundle it.
Okay. And the final question, what do you think it would take to actually see an uptick in the market in terms of deal volume and deal size?
Another global thermal nuclear war like the smartphone wars. So imagine one in self-driving cars.
Okay, so it's that kind of thing. That's what's going to drive it. It's not a decision from the Supreme Court or a change in the PTAB regime or anything like that. You actually need a situation where companies are fighting over technology.
Yeah, I think the business requirements drive it first, and then the state of the law drives it second. Yeah, I'm sure there's good, people who disagree with me on that, but I do believe that the cash drives decision making faster.
Okay, brilliant. Well, listen, Ken, thank you very much indeed. We've run out of time. It's 5 o'clock here in the UK. I think 9 o'clock in the morning over on the West Coast, and getting close to midnight over in Asia. I'd like to thank you, Ken, for the great presentation that you put together and for answering all those questions. I'd like to thank all the attendees for sticking with us over the hour and for showing patience with some of our technical difficulties. And again, just to remind you that this will be available for download and for listening and watching again in the very near future, and you'll be contacted about that. So this is Geoff Wiles from IAM saying thank you very much to everybody, and I look forward to the next webinar in the very near future. Thank you.
Thank you.